Welcome to the Deep Dive. Today we're diving into Rich Dad, Poor Dad and the cash flow quadrant.
Yeah, these books, they've really caused a stir, haven't they?
They really have. People can't stop talking about them, and today we're going to unpack all that wisdom.
They're classics for a reason. Let's
Yeah.
see what makes them tick.
One of the first things that really struck me is just how much these books emphasize building assets.
Right.
And I don't mean just like collecting fancy things,
Yeah.
it's about owning stuff that puts money in your pocket.
Absolutely, even when you're not working.
Exactly.
It's about generating income even while you're asleep. And Rich Dad, Poor Dad uses this really great analogy to explain it. The author, he talks about his two dads.
Okay.
He had his biological dad who, went to university and everything, but always seemed to be struggling financially.
Right.
And then there was his friend's dad who actually dropped out of school. But he ended up becoming a really successful entrepreneur.
And what was the difference?
Mindset around money.
Mindset, yeah.
One dad worked for a paycheck. The other built assets to generate wealth. It's kind of like, YouTubers these days.
Oh, interesting. Okay.
Some creators, they're always chasing the algorithm, right?
Right.
Desperately trying to please it for those views and that ad revenue.
It's like they're working for a paycheck.
Exact.
They're at the mercy of someone else's system.
Yes. But then you've got those YouTubers who are focusing on building, a loyal audience.
Building a community.
Yes.
Yeah.
They're creating content that really resonates with their viewers.
Right.
They're not chasing algorithms. They're building a brand, an asset.
That is a brilliant parallel.
Yeah.
Because when you've got that loyal audience, the algorithm, it starts working for you. Your content, it's like it gets amplified because you've tapped into something real.
Absolutely.
And that's what I love about Rich Dad, Poor Dad. It's about understanding the system and then making it work for you.
Yes. And a key part of that is financial literacy.
Okay.
Just like a successful YouTuber, they understand their audience.
Yes, their niche.
They understand their analytics. Rich Dad, Poor Dad emphasizes understanding how money works.
Yes.
Understanding the difference between, assets and liabilities, how cash flow operates, the impact of taxes.
Okay, so let's break that down a little bit, especially for our listeners who might be hearing these concepts for the first time. How does the book define assets and liabilities in a way that even someone who's never balanced a checkbook can grasp?
It's surprisingly simple, but really powerful. Rich Dad, Poor Dad. It defines an asset as something that puts money in your pocket.
Yeah.
Whereas a liability takes money out.
Gotcha.
And it's not about, how much something costs up front. It's all about its potential to generate income.
So a rental property, that brings in rent every single month, that would be an asset.
Exactly.
But a fancy car that comes with those monthly payments, the depreciation, that's a liability.
That's a liability.
Even if they cost the same amount up front.
Exactly. And you know what? This is where that YouTube analogy comes back in.
Oh.
Imagine a YouTuber, right? And they're investing in all this expensive equipment that they don't really need, don't really understand.
Right.
Just because it's trendy.
It's the latest gadget.
That's a liability.
Oh, okay.
But if they invest in, good lighting and good audio.
Yeah, that makes sense.
Because that directly enhances their content quality.
Right.
And therefore, their earning potential.
It's an asset. This is making so much sense. It's not about having the money. It's about understanding how to make that money work for you.
Exactly.
And that ties into this whole cash flow concept.
Absolutely.
What's the key takeaway there?
So, Rich Dad, Poor Dad, it emphasizes that wealthy people focus on building assets that generate positive cash flow.
Okay.
So, in simple terms, they're aiming to have more money flowing into their pockets than out.
So more coming in than going out.
Exactly. Like a YouTuber who's earning more from their content than they're spending on creating it.
So financial literacy is about being able to spot those opportunities, making those smart investments, understanding like the financial consequences of our choices.
Yes.
It's about becoming the CEO of our own financial lives.
Yes.
Just like a YouTuber takes control of their content and their brand.
Absolutely. And the book, it encourages us to, shift our mindset from being just a consumer, always spending our income, to becoming an investor.
Right. Okay.
Someone who uses their money to acquire assets that then generate even more income.
That's a powerful shift.
It is.
It's the difference between just, watching YouTube videos all day long and actually creating your own channel, building your own audience, maybe even generating some income from it.
Yes. And just like those successful YouTubers who branch out into different types of content.
Right.
Rich Dad, Poor Dad recommends diversifying your assets,
Okay.
exploring real estate,
Real estate, yeah.
businesses,
Okay.
stocks.
Diversifying, just like a smart YouTuber would explore different content formats, platforms, to reach a wider audience.
That's it.
Why is diversification so important, though, when it comes to building wealth?
Think of it this way. If a YouTuber only relies on one type of content
Okay.
or one platform,
Right.
what happens if that platform suddenly changes its algorithm, loses popularity?
Right.
They're in trouble.
That makes total sense.
Yeah,
So diversifying your investments, it's like a safety net.
absolutely.
It helps you mitigate those risks, ensures that even if one investment, doesn't quite work out, the others can still generate income.
Exactly.
And this concept of understanding risk, it seems so important both in the financial world, but then also in the world of like online content creation.
It is. And speaking of risks, Rich Dad, Poor Dad also talks about overcoming fear
Okay.
and taking calculated risks, just like any entrepreneur would.
Yeah.
They actually even use the example of the Alamo.
Wow, the Alamo. I'm really curious to hear how they tie that historical event into financial advice.
Yeah.
And then how does that connect to the challenges that YouTubers face when it comes to like putting their work out there?
Right.
This is getting really interesting.
Yeah, so they use this example of the Alamo as like this metaphor for facing our fears. The defenders, they chose to stay and fight, even though they knew that, the odds, they were not in their favor.
Right.
It's about having that courage when you're faced with uncertainty.
Right.
And that's something I think every entrepreneur, every content creator can relate to.
That is such a powerful way of looking at it. There's so many people out there who, they dream of starting their own business, becoming a YouTuber, whatever it is.
Right.
But it's fear that holds them back.
Exactly.
They're afraid of failing, of judgment, the unknown.
Yep. And Rich Dad Poor Dad encourages us to kind of push past that fear.
Right.
Take calculated risks. Now, it's not about being reckless. It's about recognizing that playing it safe, well, that has a cost too.
Yeah.
The cost of those missed opportunities.
So how do you know which risks are worth taking? Like, it's easy to say overcome your fear, but when you're actually in it, how do you determine what's a calculated risk versus, a potential disaster,
Yeah.
both financially and, I guess, in this world of content creation?
That's where knowledge comes in.
Okay.
And mentorship. The book stresses how important it is to learn from other people's experiences.
Yeah.
Finding mentors who've already walked the path that you want to be on.
Like an aspiring YouTuber might, look up to a really successful creator in their niche,
Exactly.
study their strategies, learn from, maybe where they went wrong.
Exactly. And Rich Dad, Poor Dad, it encourages us to find our own kind of rich dads.
Okay.
Those mentors that can guide us, share their wisdom, help us navigate the sometimes complicated world of finance.
And that actually reminds me of another like key concept from the book, which is paying yourself first.
Oh, yes.
So that's about like prioritizing long-term wealth over, instant gratification.
Absolutely. It's a total mindset shift, right? So instead of spending your income on liabilities, those things that are taking money out of your pocket,
Right.
you direct it towards your assets, the things that are
Yeah.
generating more income.
It's like those YouTubers, those smart ones, they reinvest their earnings back into their channel,
Exactly.
upgrading their equipment, trying out new content formats, maybe even hiring editors or assistants.
Yeah.
They're prioritizing long-term growth over just spending it all right away.
Playing the long game,
Yes.
both financially and creatively, and that requires discipline, delayed gratification, and a clear vision.
Right.
You got to know where you're going.
Speaking of kind of like, going somewhere, the cash flow quadrant really dives into like the different ways people can earn income.
It does.
Can you tell us a little bit more about that?
Absolutely. The cash flow quadrant, it lays out, 4 main quadrants of income generation.
Yeah.
So there's the employee, the self-employed, the business owner, and then the investor.
So it's not just about like being rich or poor. It's more about understanding these underlying systems.
Yes.
The things that actually drive wealth creation.
Mindset.
This is like kind of blown my mind a little bit
Yeah.
because it really makes you view your own career path and just your own journey with money totally differently.
Exactly. And the cash flow quadrant, It encourages us to, figure out, okay, what quadrant are you in right now?
All right.
And then how can you start strategizing? How can you move towards those quadrants that really align with your financial goals?
Okay, I am very interested now.
Hmm.
Let's break down each of these quadrants, maybe use some YouTube parallels, to make it super clear for our listeners.
Sure.
So starting with the employee quadrant,
Okay.
what's the key takeaway there?
So the employee quadrant, this is for people who, they trade their time for money. They're working for that paycheck.
Right.
They have a job, they've got a boss, a predictable income.
Okay.
Think of that like a YouTuber who's part of a multi-channel network, an MCN.
Okay.
So they might have a contract, maybe some brand guidelines. They receive a regular paycheck from that network.
Okay.
So they're essentially an employee.
Right. They're an employee even though they're in, this online digital world.
Exactly. They're trading their creative work for a sense of stability and, that steady income, much like a traditional employee would.
That makes total sense.
Right.
Okay, so then what about the self-employed quadrant?
Okay, so the self-employed, that's a little different. These are people who, they own their job. So freelancers, consultants, maybe small business owners.
This would be like the independent YouTuber.
Exactly.
Built their own brand, their own audience. They generate income directly from their content.
You got it. They're calling the shots, but they're still very much tied to their work. If they stop creating, the income stops.
That's such an important distinction.
It is.
Because even though they might be, making good money, they haven't necessarily figured out how to build that sustainable wealth.
Exactly. And that is where the business owner quadrant comes in.
Okay, so what sets the business owner apart from the self-employed? Is it as simple as just having employees?
It was more about building a system, right? A business that generates that income, even if you're not directly involved.
Okay.
Rich Dad, Poor Dad, they often talk about McDonald's.
Okay.
Ray Kroc. He didn't get rich just flipping burgers.
Right.
He created a system.
A system, yeah.
And that system that could be replicated and scaled.
So in the YouTube world, this would be like those creators who've gone on to build these entire media companies.
Yes.
Around their brand.
Exactly.
They've got teams of people managing everything, the production, the marketing, merch, the whole 9 yards.
Yep.
They've stepped away from, that daily grind.
Right.
They've created something way bigger than themselves.
They've transitioned from working in their business to working on their business.
Ooh, I like that.
It's about strategy. It's about growth, not just the day-to-day execution.
And that brings us to, I think, our final quadrant, which is the investor.
Yes.
So what's the difference between the business owner and then the investor?
So the business owner, they build systems.
Right.
Investors, they put their money to work in assets that generate passive income.
Okay.
So think about real estate moguls, venture capitalists, or even people who've really mastered the stock market.
Right.
They're leveraging their wealth to create even more wealth without actually building a traditional business.
So in the YouTube world, this might be like those creators, they're making all this money, but they're smart. So they're taking that money and they're putting it into stocks.
Exactly.
Real estate, maybe even other businesses.
Diversifying.
They're diversifying those income streams. It's not just about, what they're making on YouTube anymore.
And I think that's a really key message.
Okay. From both Rich Dad, Poor Dad and the cash flow quadrant.
Okay.
True wealth, it's not really about how much you earn.
Right.
It's about how much you keep.
Right.
And what you do with it, how you make it work for you.
How to make it work for you, not the other way around.
Exactly. It's about shifting that mindset, taking control of your finances, and then building a life where the money works for you.
This has been so eye-opening, this whole deep dive. It's amazing to me how, these books, they were written, before the rise of YouTube and all that?
Right.
But these principles are still so relevant to, today's world, this whole digital landscape.
Absolutely. And I think it speaks to how these underlying principles of financial literacy, asset building, cash flow management, it's timeless, really. You can apply them to so many different areas of life.
It makes you think differently about the choices that you make every single day, not just with your money, but even with your creative pursuits.
Whether you're, someone who's trying to build a business or create content online, even just trying to manage your money a little bit better, these principles, they can really help set you up for true financial freedom and security.
And at the end of the day, isn't that what it's all about?
Yeah.
Having that freedom to pursue what you're passionate about, to support the people that you love, and to just live life on your terms.
Absolutely. And that is going to do it for us today, but we're leaving you with one final thought to ponder. If your life were a YouTube channel, what kind of content would you be creating? Are you out there chasing that algorithm? Or are you building something with, real lasting value? Until next time, keep diving deeper.